This video is based on the technical analysis of US30, which we also refer to as Dow Jones. And at point in time, we find ourselves on the daily chart. And in regards to the daily chart, we all know that for the most part, the daily chart is in an upward trending market, which means that for the most part, we should be looking for potential buy opportunities, But what else do we see in regards to the technical analysis of US30? In regards to this chart, which is the daily chart, we can see that the market had given us this very nice W structure over here, which had a neckline at that point. And as you guys know, whenever we have these patterns, we want to see price breaking to the upside of the neckline, and then in the future coming back to the neckline to give it a test. And generally speaking, we look for those potential buy opportunities where we have that neckline, which is over here, especially if the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. And if you were to utilize the Fibonacci retracement tool, you would see that the neckline, which is over here, of this W structure actually aligns with the 61.8% Fibonacci retracement tool. So what I'm saying in other words is that at this point over here is where we should have looked for potential buy opportunities. But something very interesting happened in regards to this area over here, right? If I can just zoom in, right? If I can just zoom in, you'll be able to see that the market actually, instead of bouncing off of this level and pushing further up, we actually saw it play in and around that area, right? Moving sideways. And the reason why the market moved sideways is because it was forming a trap. Because remember, guys, we had a W structure, right? Price broke to the upside of that neckline, went up, came back to the neckline to give it a test, and at this area over here, which is over here, right, the market moved sideways. But if we were to go to the H4 chart, we would see that within this block over here, we actually have a double bottom or a triple bottom. Now, as I said, this was a trap, and that is because a lot of traders and investors usually buy on that second leg of that W structure, and they place their stop losses just below, right? And in the case of triple bottoms, right, we know that people also buy at this point and place their stop losses just below, right? So within this block over here, there was a lot of money stuck just below that block. Hence we saw this big bearish candlestick over here pushing further down, right? That big bearish candlestick pushed further down to grab that liquidity or those stop losses. In fact, let's go down to the H4 chart and see what's happening down there. And this is the area that I'm referring to, which is over here, right, where the market had given us a triple bottom, right? We know that a lot of traders entered at this point as they were seeing a double bottom, and then again in the future they bought at this point as they were seeing a triple bottom, placing their stop losses just below. Hence we saw these candlesticks over here pushing further down to grab all of that liquidity, and we saw the market move further up from there, right? So what else do we see in regards to the H4 chart of US30? Another thing that's happening that's very much interesting is that as much as we had that stop hunt to the bottom, as much as we had this stop hunt over here to the bottom, right, as we had multiple stop losses located here, we also have what seems to be a W structure over here, right? I hope you guys can see that. And also remember, whenever it comes to these W structures, most traders and investors buy on that second leg of that W structure, and they place their stop losses below as the anticipation is for the market to move further up. However, we can also see that we have this candlestick over here, right? It's actually this bearish candlestick over here, right? It's a bearish candlestick with a small body and quite a long lower wick, and what that tells us is that we have a lot of liquidity stuck at the bottom where that candlestick ends. And as you guys know, liquidity is actually money that needs to be triggered by the market at one point or another. So as much as the market had stop hunted to the bottom side and pretended as if it was going to go up, we may actually see a situation where the market actually from this level, pushes further down to just below there. And that is because, as I said, guys, we had that W structure, and we know that traders and investors usually buy on that second leg of that W, and they place their stop losses below. So we have a lot of stop losses located here. To add to that, we have this candlestick as well, And what that candlestick is, as I said, is a liquidity candlestick, as it is carrying a lot of liquidity at the bottom, right? To add to this, right, the third point is we also have a gap here, right? Gaps are very much similar to these liquidity candlesticks in that they too carry a lot of liquidity. And as I said, liquidity is money, and we all know that the market will always go to where the market, or rather where the money is. So there is plenty of scope for the market from where it is to actually move further down, to close this gap, to grab all of that liquidity, and then to push further down again to grab the liquidity associated with the candlestick, right? And then to grab all of those stop losses that are located just below, right? So we just need to be careful in regards to looking for potential buy opportunities, right? Myself personally, I would rather wait for the market to actually move further down to close all of those liquidity areas, and then once that's done, I believe that we're likely going to see the market move further up, right? So we just need to be careful, right? Also, there was some positive news in as far as Jerome Powell is concerned on Friday, and that's why we actually saw the market over the last couple of days move further up to around this level, right? But as I said, we just need to be careful, guys. We're still very much in earnings season, and I believe that once earnings season is complete, we will start to see some proper price action movements, and that's when I believe we should start looking for those potential buy opportunities, right?